Good morning. This is Ken Long from Tortoise Capital, and I want to take a look at the daily report for December 28th. And we highlighted some warning signs to pull out of this matrix of indicators. So, things that have me concerned right now are as follows. First, we're in a bull market, but we've pulled back to oversold conditions, and you can see that also down in here in the channeling rules. The U.S. large caps, mid caps, and then EFA, the Euro Asia blend, are all in oversold conditions. That can be a good thing in terms of opportunity trading, and that's what the channeling system will get. But after this nice long run up we've had from the surprise Trump election and going into the new year, I'm a little concerned that this might be one of those first leg down and more on the way. So we've seen oversold. We can see oversold here. Got some broad market indicators. They're all in that oversold condition. So that's a world market condition. Looking at the risk Z, we are late in the fall of volatility here, and so when that histogram has rolled over from 1.5 sigma down into approaching the zero line, that's a place where we are primed for a volatility event. So you get these kinds of spike downs, which can lead to a 5% sell off in the broad market index pretty quickly. Looking at ADX, we've had a nice strong upward trend, but now that has started to roll over, and the bears have started to tick up in the last 3 days, while the bulls are dropping down. So that's a concern. All right, shifting a little bit later in the daily report. Now we're taking a look at the slope of the 30-period regression line. This is that 10-year histogram. What I notice here is that the peak of the RL30 uptick was as good as 1, 2, 3, 4, 5, 6. It's one of the top 5 in the last 10 years in terms of aggressive gains, and that has started to roll over. So when we zoom in on the last 200 days, we can see that we had this crossover, which occurred at the start of the Trump election, and then got a 3 sigma move up, and then it's rolled over and crossed its own RL30. So that was a warning sign about 3 days ago. The standard deviation of price compared to the last 30 days is declining, and we are right on the edge of getting into a quiet market condition using our standard market classification, and so that can lead to this kind of volatility spike in the short term. So I'm concerned on a volatility basis. So now a little deeper in the report, we're looking at the regression line slopes of 3 different regression lines: the 10, the 30, and the 90 in the red. And we are the 30, you can see, is rolled over. We've seen that before. It's getting ready to come back just into the bounds of normal. So that tells you this really was an exceptional upward move in those last 30 days, right? And the 10 has already rolled over significantly. So the last time that we've seen this pattern using the nearest neighbor analysis, it was right here. And we had this decay, and it came all the way down to -1 sigma and really down to -2 sigma at some point. And that move from here corresponds to a market that had a nice rebound and then was a steady decay, then a spike down, stable spike down. So this was a 5% loss over that period of time here when the 30 went from here all the way down to the bottom. So we have not had a 5% pullback from the top yet. So that's why I'm concerned that if this does come down and violates through the bottom of the river, we're really looking at a drop from about 225 down to maybe 210. And it wouldn't surprise me to see support here around 215, but then 210, and then maybe even a test of 205. And if 205 cracks, then look out below. And now the last one I want to look at is just the This is that gentle climb to the top. This is really, this was Wednesday's move. This was the first big spike down that we've seen, and it's testing this whole support level, and that's why I think a move back to 220, even 215 is certainly in the cards. And again, that's where the slope of the RL30 shapes out. Now, as an example of how to apply that kind of insight about volatility and market turning points into your swing trading and improved day trading, we're taking a look at VXX, the volatility ETF right now. This decline from this the Z2 excursion all the way through the river and then rolling over and collapsing. This has been that that Donald Trump long side move in the market. So volatility has been collapsing. And so last night we were concerned about this potential turning point showing up. And so we're going to zoom in and take a look at the intraday trade on VXX, and here that we were postured to take and we're well prepared. Now, the size of that move is in a nice intraday bite. The last time we saw that was up in here. So we're ensuring that we're capturing this nice move. But what I want to show you is that a 2-hour chart is a nice way to approach swing trading, because when you get those measured turning points, those Z2 excursions, and then owl entries, you get a nice move, from 37 down to 25, and that's a 30% move adverse in VXX, which we can pick up simply by trading the inverse long. We'll take a quick look at XIV. Is the inverse. So that's that same move that we're getting the other way. But now this double top is even easier to see, this collapsing dragon move in here. So because of those warnings that I described to you, we were positioned this morning for this collapsing dragon. So we'll zoom down into the intraday move. And here's our nice move from the opening. Right, so the open occurs right here, and then we get this collapsing dragon entry right around 48.65, and when we take the owl exit, we're at 47.30. So you're talking a $1.30 on what is essentially a 30 or 40 cent risk. So you're talking a 3R move inside here on a single position. When we get down here to the owl pattern, this is our standard owl entry. We have an ambiguous move down, and this is counter to the longer term trend, so that makes it even better. So big move down. You'll notice a distance from this RLCO outside the river to the VWAP, so that VWAP sets a nice target. So unambiguous move, RLCO outside the river, the RL10 crosses the dragon, the 30 is rolled up, the dragon rolls up, so our owl entry is right in here at 47.40, and we're holding 47.85 right now. So that's anywhere from 1 to 1.5 hour, depending on the size of your initial risk. So the point is, you get this large intraday directional counter trend move that derives from those warnings that we looked at in the nightly report. So there we are. Thanks for your kind attention.